stop calling your property an asset if you have to feed it with your salary every single month. That's a liability. We use the 1% rule to help us find cash flowing rental properties that puts money in our pocket every single month. What's the 1% rule? Let's talk about it. Hi, I'm Han, co-founder of Bite Size Investment, where we teach people how to buy cash-flowing US rental properties from all over the world remotely. We are now in the US traveling through Daniel Boone National Forest, and today we're going to talk about the 1% rule. Let's take a look at the math that we are used to. You buy a $1.5 million condo and you rent it out for like what, $3,000 to $4,500? You think it's alright, right? But wrong. That's not great. Why? Because after all the expenses, like for example, your mortgage, your maintenance, your property taxes, maybe some repairs, maybe some vacancies, you're actually negative cash flow. You're actually funding, feeding the property, subsidizing your tenant. You are actually losing money every single month. That's not investing, that's speculating. You're buying, hoping for something good to happen in the future, which may not come true so soon. That is why we invest in the US. We usually buy properties that fulfills the 1% rule. What is this 1% rule? It is where the monthly rent of the property is at least 1% of the purchase price. An example is we buy a $100,000 property and the rent must be at least $1,000. What does it translate to in our Singapore context? It means if we were to buy a $1.5 million condo, we must expect a $15,000 of rent per month. This translates to a 12% gross rental yield. Why is this important? Because it ensures that we have enough cash that we collect from the rent to pay for all the other expenses, like what I mentioned just now, your mortgages, your maintenance, your property tax, and buffers for your vacancies. If you think that finding deals in such markets means that the property doesn't appreciate, you're wrong. Actually, these are places where there's great job growth, population growth, thereby increasing housing demand. So many of these places do actually experience appreciation on top of the cash flow. All you need to do is make sure that you have your fundamentals right, do the research and make sure that the market actually grows. Note that this 1% rule is not a blanket rule. We do not buy every property that fulfills this 1% rule. It's just a basic screening for us, like a sniff test, to make sure that at least it is able to generate enough income to pay for all the expenses. We still need to run it through our calculator. While you're not able to find such numbers in Singapore, we find properties fulfilling the 1% rule pretty frequently in the US. If you want to find out where and how to find these cash flowing housing markets, click on the link below at where the launch pad is. We share our calculator and a short course to tell you where to find such housing market. If this video gave you value, please help us like and subscribe. And if you want to find out more about other videos, check this one out or this. Thank you so much for your time. I'll see you in the next one. See ya.